Global is in the spotlight. Their profits have jumped. What's the outlook for FY25? We've got Rajat Kathuria, who is the CEO, now joining in. It's been a good set of numbers, Rajat, for Q4. All in all, your profits actually have jumped more than 5 times on a year-on-year basis. What has really helped this, and will the momentum when it comes to profitability continue going into FY25?
Yeah, thanks, Aisha. Thanks for calling us on your show. So, see, we are going through a very sustained trend in terms of very strong housing demand. So if you go back 4 years, fiscal year 2021, our pre-sales numbers were close to about 1,600 odd crores. That has grown at a, sales CAGR of about, 62 odd percent. And, last year we managed to achieve about 7,300 odd crores. The key takeaway, for us as a corporate is that, the market stays supply constrained. To the extent we are able to, create supply, it is kind of consumed. So, our current unsold inventory stocks are at all-time lows. And, whatever we are launching is getting sold, so that's the biggest trend. In addition to that, I think realizations have improved. People could argue that, they've risen faster, but, even if you look at our last year performance, we've sold about 4,600 odd units with an average ticket size of about 1.6 crores per unit. And average realizations, sub 12,000 rupees a foot, which is sounds, value for the buck, which the customer is paying. So, these two are very critical sort of, key performance indicators, which one should look out for. And at profitability terms, see, if you're selling products on an average of about 12,000 odd rupees, it is quite profitable. We anticipate, EBITDA margins, anywhere in the range of 32 to 35%, on these sales which are taking place.
Of your collection, how is your collection cycle moving? Which is that you've launched projects. As per the policy, you'll have to start booking the gains when the construction activity and the delivery starts. So purely in terms of the numerical number in FY25, how much of your pre-sale would be booked this year?
So two separate aspects, Nikunj. One, you've talked about collections. Second is revenue recognition, if I understand it right. So, see, collections are moving in tandem with the pre-sales. So, FY23, we collected about 1,900 odd crores. In FY24, that numbers jumped to 3,100 odd crores. For FY25, we've given a pre-sales guidance of about, 10,000 odd crores, which is up 36% over the, last year performance. And even in terms of collections, we anticipate close to 6,000 crores being collected from customers during the year. So, we are almost anticipating doubling our collections in the coming year. As far as revenue recognition is concerned, we are anticipating project completions to the tune of about, 3,800 odd crores, during the current fiscal year.
Following a combination of joint development as well as buying land and then building it up, what kind of policy are you likely to follow at a group level in terms of expansion and future launches?
Yeah, so see, our preference is usually to, buy land. There are situations where, we can't buy and, the counterparty wants to do some sort of a, joint development or joint venture sort of agreement. But, keeping those aberrations aside, our preference has been to, acquire land. Last year, we've done very good acquisitions, or I would say very, marquee acquisitions, in the prime areas of Gurgaon, which is the southern peripheral road. In Sector 71, we've, completed acquisitions of almost 17 million square foot of land. And there were certain JDA partners on other, project parcels. We've even acquired land from, these JDA partners, which is somewhere close to about 1.5 million square foot. So, we've added significant amount of, land in the previous year, which gives us the dry powder for the next, 2 to 3 years of launches, assuming a very strong growth rate, in terms of pre-sales.
Rajat, what about the pricing, and especially in the areas that you operate in? Because, that's kind of a contrast to what's happening in Mumbai, where we are right now, because the supply and the quality supply has been there for many years now.
So see, it's very good to see that okay, you're at least comparing Gurgaon to Mumbai, because see, Mumbai is as a city, it's so old and so much established. It's such a comparatively so much more deep market, but Gurgaon per se is see an area adjoining the Delhi capital, which hasn't seen a lot of development the past few decades, and Gurgaon has definitely benefited out of it. But Gurgaon is seeing very strong migration trend in the market, and there is still very little supply. If you look at numbers, probably it would be less than 20,000 homes which probably got supplied in the previous year in terms of primary launches. So we feel if we are selling on an average at about 12,000 rupees a square foot, it is still within the affordable sort of category in the current context. Prices may go up a little in the coming year.
I was not comparing really. I was wanting to find a comparison. I know the markets are completely different altogether. Okay, Rajat, great speaking with you on the show. Thank you so much for taking the time
Likewise,
out.
thank you very much. Good day.
If you like this video, then like, share and subscribe to ET Now.